And this is why the trend is as important as it is. If you have been with me for any length of time, you will know how much I go on about the trend. You have to identify the direction of the trend. And again, if you have been with me for any length of time, you'll know that there's a couple of moving averages that help me with the trend. There's a lot of different tools that you can use to find the trend direction. And the ones that I prefer are the moving averages. But I'm going to show you some different tools that you can use to help you identify the trend direction. We can use a couple of different tools that can replace those averages and still give you the direction of the trend. What I'll do is I'm going to reduce this to two different moving averages. So we'll go with a 50 and we'll go with a 21. Now these are the Avalos settings. So we've got the 50 and the 21, or the 21 and the 50. And if the 21 is above the 50, we have an uptrend. And if the 21 is below the 50, we've got a downtrend. Now that's really simple. It's really clear. It's really easy to see. And when you have two different moving averages on your chart that are acting as the trend, you can also be using the smaller moving average to help you with more information like pullbacks and entries and trailing stops and these kinds of things, which is why I do like the moving averages as much as I do. But again, if you don't want to use the moving averages to determine a trend, I will show you a couple of other tools that everyone has access to that you can use to determine the trend direction. Now, the first one we have is an RSI. Now, this looks really choppy. With this setting, I'm not looking for overbought or oversold as much as I am just looking for crossover type signals. But we can use this to determine a trend direction. So I'm going to switch this RSI length from 5 to 50. And with this 50, well, I've got these zones here. Let me reduce those zones. So now we've got a 50 level in the middle of this RSI. When the RSI is above this 50 level with this 50 setting, we can easily say that we are in an uptrend. And when that 50 is below, we've got the 50 RSI below that 50 level, we can say that we're in a downtrend. We're looking for long trades when the RSI is above the 50 level and short trades when the RSI is below the 50 level. Now, the next one that we're going to look at is the MACD. So let's reduce this one and we'll put the MACD on the chart. Now, with the MACD, we've got a histogram, a MACD line, and a signal line. And what we want to do is get rid of that signal line and the histogram. So if I double click on that, I'm going to change the settings to 21. I'm going to change the setting to 50. And the signal line, it doesn't matter because we're not going to show it. So if I've got a 21 EMA, a 50 EMA, I'm going to hide the histogram. I'm going to hide the signal line. The zero line is pretty important, so we're going to need that. I will put the zero line on the chart and we are good to go. Now with this, we are looking at the difference between two different moving averages, between the 21 and the 50. This is the set of moving averages that I have on the chart. So you can see when we have the moving averages trending up, or that 21 is above the 50, that MACD line is above its zero line. And when we get an area where that 21 drops below the 50, that MACD line is below its zero line. But having a MACD line without the histogram and without the signal line is an awesome way to determine the trend. Now again, I prefer the two moving averages because not only do I know what direction the trend is, I can see how the price is relating to those moving averages. I can see how the price is bouncing off of that 21. I can see how far away the price is from that 21. I can see where the pullbacks are and so on, which is why I do like the moving averages, but I digress. So we looked at an RSI and we looked at the MACD. Another one we can use is something called the CCI. So let's throw that on the chart. Now with the settings of a CCI, I'm looking at the CCI with the zero level. Now, because the way the CCI is created, 50 isn't going to be enough. I want to jump that CCI up to 100. So let's go with 100. And with the RSI and with the CCI, I generally like my source to be typical as opposed to close. Close gives you a little extra chop. And when you have the CCI or the RSI moving along that 0 or 50 level, it can get extremely choppy. So if I have it set to typical, it does reduce the chop just a little bit without reducing the efficiency of these indicators. So now we've got a 100 period CCI and we can see where the trend is up. The CCI is above its zero line. And when the trend is down, the CCI is below its zero line and we'd be looking for those short trades. Now, I did mention earlier about the QTI. Let's throw in the QTI as well. What we're going to see is something a little bit unusual. We've got these areas of indecision or so. What we have is these gray areas in the QTI where it's not 100% certain what direction the trend is. So it prints it gray. When we get a good solid trend, it's going to be either blue or it's going to be red. So when the market is trending down and there's no question that there is momentum in that downward direction, that QTI is going to be red. And when that market is absolutely moving up, that QTI is going to be blue. Now again, this is not something everybody has. This is one of the indicators in the Ultra Blue members area. So I won't harp on this one too much. And finally, another one that is in the members area, let's take a look at the switch. So with this, we can see the areas where we've got an uptrend that are bright green. In this case, they're super bright green, and the downtrend is red. Now, with this information, I'm going to put back on one of the other indicators that we have free access to that everybody can use. So let's put on the RSI. And with the RSI, I'm going to change that to 50 once again. So let's go with the 50 setting, typical RSI. Now, like we were looking at before, when you have the RSI above the 50 level, we're looking for buys, and below the 50 level, we're looking for sells. So let me just get that 50 level back. So we're looking for buys and we're looking for sells. You can duplicate these trend indicators to give you signals. If you use the long settings for the trend, you can use short settings to give you signals. And we'll take a look at that. We've got the RSI. This is the 50. We're going to apply a different RSI, and we're going to use my standard 5 setting. So if we're looking at an RSI that is above the 50 level, and the setting for that is the 50, so we're looking at that trending RSI, we could be using the faster signal RSI to give us the trades. So we could be looking at a long trade right here. So this would be the long. We could be looking at a long trade right here. So this would be the long. We could be looking at a long trade right here. So this would be the long. I think you see how this works. You've got an RSI that is above the 50 level as it's trending up. We're looking for the fast RSI to drop below that 50 level and then pop back up above it. And that's going to give us those buy trades. Now we can do this with the CCI as well. So let's take a look at the CCI. We'll put on 2 instances of the CCI. This first instance of the CCI, we're going to make this one 100. So we've got the 100 CCI. And let's change this CCI. What's the inputs? 21. Yeah, we could keep that. So let's keep this at a 21. So we've got a 21 CCI is our signal CCI. And we have a 100 CCI, which is our trend CCI. We've got the market trending up. The CCI is going to be above its 0 level. And when we're looking for signals, that faster CCI is going to drop below its 0 level and then pop back above it, giving us that signal to go long. So we've got a long signal right here. We've got a long signal here. We've got potentially one in here. We definitely have a long signal right in here. Now the market's a little bit flat, so you don't get to see quite the market movement because we've got the indicators taking up so much space, but you do get the impression. You understand how this is working. It's important to me to identify the trend so I know what direction that I'm trading. And I like to use the moving averages to identify the trend. But you don't have to stick to those moving averages. You have other tools at your disposal. The RSI, the MACD, the CCI. These are wonderful tools that will help you use the trend if you elongate the settings. So give those a try and see what you think. Now, there is something that I haven't done before that I want to do here. I get a lot of emails asking me about the membership course. A lot of people do want to be an Ultra Blue Forex member, but admittedly, it isn't the cheapest course out there. There's an awful lot that goes into the Ultra Blue Forex members area. So if you want to become a member of Ultra Blue Forex, what I'm going to do is put a coupon code in the description of this video. It'll give you 25% off, and that coupon code will only be good for 5 uses. Grab that coupon code and it will save you a few bucks. I look forward to seeing you as a new member of Ultra Blue Forex. And if I don't see you in the Ultra Blue Forex members area, I will see you in the next video.